Welcome to Biztechasia Technology Show. Now, our guest for today is Bharath Vellore. He's the General Manager APAC for Provenir. It's a software company that helps financial institutions automate loan origination, credit risk analysis, merchant onboarding, and knowing your customer. Now, to tell us more about this, Bharath, welcome to the show.
Thank you, Brian. Great to be here.
Now, Bharath, for a start, give us an overview of Provenir and its history.
Sure. So Provenir is a US headquartered business. It has been around for more than 16 years now. And in the last 16 years, it has seen for the first, I think I would divide the story into two halves. I think the first half was growth that was seen within US and to a certain extent into in the UK market. But what has happened in the last 5 to 6 years is Provenir has become a global business. We now have officers, employees, and customers in every continent. So we have offices which are addressing the LATAM market. We have offices and employees which are addressing the Africa market. And I am personally responsible for the APAC region, where we have a team here in Singapore. We have colleagues in India, Malaysia, Indonesia, Australia, Vietnam, and Philippines.
Okay, give us a snapshot of Provenir's products and services solutions.
Sure. So Provenir, we have a risk decisioning platform. It is on the cloud. It's a cloud native application. And risk decisioning, right? As in, not many would be very familiar with what exactly does risk decisioning mean. To put it very simply, it helps you automate your policies and make decisions, right? And a simple example, and one of the most common use cases for decisioning is processing loan applications. So for any financial service provider lender, you would have your credit policy in place. That credit policy has multiple assessment rules that are built into that policy. How do you then automate this entire execution of the policy? When a loan application comes in, how do you make sure that the policy is being executed in an automated manner? And that is where a decisioning platform comes in, where your entire credit policy is basically coded onto the platform, and you could have decisioning done on the go. Where Provenir and our platform kind of sets ourselves apart from what has been there in the market for the longest time is we've kind of come out with a low code, no code platform. So it's very business user friendly. I think previously there were decisioning platforms which required a huge help from the IT team to every time code in the policies, and then you would have to further any changes. Again, credit is something which is very dynamic. Your credit policies change from time to time. New data points come in for consideration. And
also new products that you want to innovate. And so in the old days, this is the problem, right? The product guys want to push out a new product. They go to technology and say, oh, hang on, we need to get the vendor to come and code this. And this is the huge problem. We can't roll out according to the timelines that we've committed to upper management because we need it coded in.
Correct. And more importantly, we are living in the age of agile products. So the legacy tech doesn't work with agile products, where you have to keep changing your product features, make them very responsive to the market demands. So in that setup, the legacy products were struggling, and that is where we came in with something which is very business user friendly. It's a visual studio that you work with. So any policy that you're trying to, from a business user point of view, they understand the policy. They don't understand the integration behind it, the coding that goes behind it, the scripting that is needed.
Yes.
So all that is kind of taken out of the equation. A business user just has to drag and drop a few business objects, which are all pre-coded to do the kind of analysis and execution that is required for you to run your decisioning.
Okay, then give us some context in terms of timeline to execution, legacy versus Provenir solutions. What are we talking about? What is the difference?
Sure. So previously, like, and this is with banks, right? Banks were always the first to kind of come out with this, like bringing in decisioning into their setup. So a decisioning project with a bank previously was at minimum 8 months to a year, and there have been projects which have taken longer as well. because there was a lot to kind of code, build from the ground up, a lot of data integrations that had to be managed. And then you can imagine the data points that drive a credit assessment, right? There's internal data, there's third-party data points. Bring in all of those, aggregate those data, take those specific data points and get them into the policies, code the policies out, and then subsequently integrate that into the operational systems, which is the loan disbursement and then managing the loan subsequently.
And doing the parallel runs along to make sure that the outcomes are correct before we even go live.
Exactly. And that those, when you were building them ground up, which is what the legacy approach was, the projects were easily 8 to 12 months or even longer. We have cut down that to pretty much from for a smaller financial lender, we could do it within a month. And for a large bank, we could kind of set up a decision flow and get it to go live in 2 to 3 months.
Okay, so that's huge savings in terms of implementation. But from a product standpoint, so in other words, because it's no code, low code, and the power is in the hands of the user, the business user. So in other words, the product folks within the bank, for example,
yeah,
what are we talking about in terms of, I've got an idea for a new product to address, say, the 25 to 30-year-olds who have just graduated, who are looking for some financial solutions in terms of personal loans and so forth. How fast can I implement it with your product?
Isn't you basically are talking about the value proposition that Provenir talks to our customers about, is like, you have agile, you have products that you want to bring to the market. You have products which want to be digital in nature. As you clearly know, digital lending is the proposition now when it comes to, especially for consumers and SMEs. A huge proportion of customers right now, especially in Southeast Asia, prefer getting their kind of financial services provided to them digitally, right? Hardly anyone goes into a branch nowadays. So when it comes to digital lending, it's all about having access to real-time data and using that real-time data to make fast credit decisions and providing kind of customized and personalized products to the customers, right? And when a product manager is sitting there kind of envisioning this kind of customer experience, like, yes, I need these data points, I need to make these quick decisions, and they should be basically having a loan on the go with either with an embedded finance setup or with a digital app that their digital banks app that they're working, the customer is using. That's the experience that they want to provide. When they want to provide that kind of an experience, but then they go back and try to work with a product which doesn't kind of enable that in a very quick time, it doesn't work like that, right? So that is where we come in and we help them to kind of say, hey, within 5 to 6 weeks, you will be able, whatever kind of design that you've had in your in your plans and experience that you want to provide, that could be enabled using our decisioning platform. We could help you integrate with all this data points that you're talking about. It could be the credit bureaus, it could be the alternative data, credit data that is available out there. It could be your internal transaction data. So bringing in this multitude of data points that you have, aggregating them, and then orchestrating the right data points that you want to kind of use for your credit scorecards. Then these scorecards, which are pretty much drag and drop in the way that they could be built, and then by that from the scorecard, and once the assessment is done, taking that into the product that you are actually offering and the kind of features that you have within the product, within the loan product, and customizing that, personalizing that, building that personalization and customization into it. All that could be kind of built in and plugged into your operational systems within 6 weeks.
So, and that's fascinating, because obviously what that empowers you to do is with your clients, which obviously are financial services institutions and also fintechs, your neobanks, your buy now, pay later folks. Give us some ideas on some of the people you've helped across Southeast Asia in particular.
Oh, sure. As in, we've got buy now, pay later, as you just mentioned, which became a huge proposition that came out in the last 2 years. So with that, we've also helped quite a few buy now, pay later. Again, the essence of buy now, pay later is it is a credit decision, but it is made on the go at the point of purchase. right?
Yes.
So people are kind of buying something, and at that point, at that instant, they're offered a credit on that particular purchase. So that kind of instantaneous and very specific to the transaction kind of loan product that you want to offer, our platform is a perfect fit for that kind of decisioning. So we've helped buy now pay later businesses. We are actually one of our largest customers here is a super app, one of the largest digital ecosystems. I wouldn't say the country because that will give away which customer it is, but it is a large unicorn, which is a super app which has got ride hailing and food delivery and everything as part of it. And their use cases is it ranges from buy now pay later to financing for their riders to working capital finance for their merchants, and all within the digital ecosystem, right? The entire interactions and the provision of these loans and credits, everything is happening within that super app. And the multiple data points that are coming in and through the digital ecosystem are consumed within Provenir. They're branched out into specific scorecards for each of the products that they're offering. And from there on, the products that each one of them would get, right? People would have a credit limit assigned to them within the app. People would be provided a working capital loan on the go for that particular month, right? So these kind of use cases within the super app, we've done that. We've had digital banks which have gone live with again, digital banks. The entire experience is digital. That is their differentiation.
Which digital banks have you helped?
Again, without being able to name them, we've got one of the largest digital banks in Philippines, which is with us. We have a digital bank in Vietnam, which is currently in the testing phase. And we are now speaking with digital banks in Singapore, Malaysia, and Indonesia right now. We also got one of those large neobanks in Indonesia, which has gone live with us as well. They've actually done a huge webinar with us recently.
So Bharath, one of the key things is with the example that you use with that large super app, which we know has a green logo, and also the examples that you used, the key thing that is a thread is around your solutions enabling financial inclusion, because essentially these are markets where there are huge numbers of unbanked and underbanked people. And the way you aggregate data points is really helping the financial inclusion challenge in Asia. Walk us through some of those things that you've just discussed.
Absolutely. And it's very relevant for the region we are in, right? Southeast Asia financial inclusion is very relevant, as in there's a huge unbanked and underbanked population. But at the same time, this population is very digitally native. While they're underbanked, they're digitally native. More people use smartphones than actually have a bank account. And that is the reality in Southeast Asia. But with that, it actually gives us an advantage because they're digital native, there is a lot of data on these individuals. So more data, better data leads to better risk assessments, right? So that is where the access to financial services for this large population in the region is being enabled. We, as in our platform, allows for collection of this multitude of data points that are now available on this population. So if you go to a traditional credit bureau, you might not, these people are called no file or low file customers, right? You wouldn't have any file on them because they're basically invisible to the traditional banking segment. But if you tap into some of these data points that are available for them on the digital side, there's significant amount of data. There's data available on their mobile devices and their behavior on their mobile devices. There's data available on their social media behavior. There's data available on their transactions behavior on e-commerce website. So they might be visible to the traditional banking system, but for those financial service providers, banks included as well now, who are really keen to leverage on these alternative forms of data into their risk assessment on these customers, that is where you are able to then bring in financial inclusion.
So one of the key things, Bharath, is also in your space now, the use of artificial intelligence and machine learning in order to then help the whole credit decision making. How is that changing the landscape This is not new technology, but it's the use of it is accelerated. Tell us about how this is helping really banks and financial institutions make even better decisions.
Yeah, as you rightly said, Brad, it's not a new technology. As in, it's only coming to the fore now because I think the confidence on the application of this technology has increased, and that confidence comes again because now the level of digitization that is come into place. Level of digitization means you're collecting better data, you're collecting more data, and when you have more data, and then you collect the outcomes of this data as well, right? And that's what's happening right now. So on Provenir, we have an AI module which is built into the decisioning platform. So again, I'll talk by using a use case, right, as an example.
Yeah.
So a financial lender uses our decisioning platform. They've built in their entire decision flow, which is, hey, this is the data that I'll be using. Based on this data, I have these scorecards, and these scorecards will do an assessment on this particular loan application, and subsequently, this is the product that we'll offer them based on that assessment, right? So now that they've built their decision flow and they start kind of offering this product out, they now have the outcomes of their decisions that they've done as well. They've offered loans. Based on that, they would know how many of them have become non-performing loans or performing loans. Now you could bring that data back in, and within our platform, within the matter of it's a matter of minutes, you could build a model which will recommend you that, hey, your decisioning can be made better. You can have an uplift on the performance of your loans by this much percentage if you're able to use this model. And that's really, as in, if you translate that into specific impact on the business, that's huge. And the power of AI is that it can do that in minutes. Now that once you have the data, within minutes, you're able to bring in such a significant impact onto the business. You're able to build a model which will improve the assessment that you have on your customers, help you make more accurate decisions, and also, of course, make faster decisions. That's, of course, in the play, but more accurate decisions and decisions that you could be more confident about because it's just based on data. And again, we've made sure that, because one of the things and our risks around AI is always around bias, right? Yes. Because it is purely driven by data, people are worried that there might be biases that might be creeping into the model. So one of the things that even regulators like MAS and other regulators in the region have insisted upon is really having explainable AI. Our auto machine learning platform that we have, auto ML platform that we have within our decisioning, actually provides you explainable models. So you could actually see what particular features within the customer's application is actually triggering out a better outcome. So you know that if a certain feature is around gender, or is around some race, or is something, so where you don't want to have that kind of bias come into your lending decisions, so the model explains itself. This is the feature. So do you want to tweak it, or do you? So it keeps it back. It gives the decisions back into the hands of the business user to be able to take that out to say that that's not the feature that I want to work with. I want to work with different features. So it's explainable AI. So it gives comfort to the regulators as well that it is not introducing unintended bias into those decisions.
So this is really important. Explainable AI. I think that's a key thing, because you've just mentioned a very big downside of AI, which everyone's worried about, is the fact that bias creeps into models. And then especially in a lending situation, you may actually have the exclusion of certain groups or communities because, unfortunately, bias is built into the models. So that's explainable AI is something that gives me a little bit more comfort that basically we don't go to the other end of the tangent and people are disadvantaged by technology.
Especially when the decisions are related to financial services, right? It's provision of loans. They have a significant multiplier effect. So you don't want unintended biases. That's the word. A model always creates a bias, but you don't want to create a bias towards a feature that you don't, that's not the intention of it, right? So unintended bias is the key element there. So we don't want to bring in that unintended bias, because there's a multiplier effect. a certain community or a certain a region doesn't get access to those loans because of such bias in the models, it has multiplier effect on the region.
Now, Bharath, I want to ask you, there's a lot of solution providers like you out there. If I'm a CIO of a bank or financial services company or super app, why should I pick Provenir?
So again, there are not a lot of providers like us, just to qualify that, Brian. I think what we bring is definitely one of the best tech stacks that is out there. Really a low-code, no-code solution that works fantastically well. We've received great feedback from the customers that use us. They see that our product kind of sets us apart. So we're a product-led organization more than anything else. We are very proud of the platform that we've built. As I just mentioned, it's not just a low-code, no-code nature of the decisioning part of it, but we've got a fantastic data orchestration, data aggregation element into it, where integrations are built on the fly and data integrations are built on the fly. And then we also have an AutoML platform with explainable AI into it, where you could improve your decisions by models that could be built within minutes. And the feedback from this platform has been fantastic. It helps you build digital products, digital financial products for your customers within a couple of months, right? So very fast time to market. So the time to value that you will see from your for your products, it will be shortened significantly.
Now, looking ahead to 2023, 2024, we're almost at halfway point in 2023. What should we expect from Provenir from a product perspective and also from an expansion perspective?
So on the product roadmap, we've already got some very exciting things built in. We've kind of identified three to four areas of work. One of the big things is we're doing a huge UX revamp of user experience revamp of the product. So that's something that we're all looking forward to in the coming quarter. We're also kind of fine-tuning and tweaking a little bit more on the AI piece so that we could have unsupervised learning also built into it, which has been something that our customers have been asking for. And even on the low code, no code, we're building object level accesses, which is also coming up. So there's some quite very exciting things that are on the product roadmap. From an expansion point of view, you will see very soon, you'll hear from us with a lot more work that we're doing with digital banks. I think digital banks, banking as such is picking up in the region. So from Malaysia to Indonesia to Singapore to Thailand, we're speaking with a lot of digital banks. So you'll hear a lot around our work with digital banks in the region, as well as some large banks in Indonesia and Singapore who we're working with. So yeah, so a lot of great work within the Southeast Asia region that to look forward to.
Bharath, it's been a great conversation. I've learned a lot. Thank you very much for taking your time to come on the show.
Thanks, Brian, for having me. It was a pleasure speaking with you.
Now, I'm Brian Fernandez, and we've been speaking to Bharath Vellore. He's the General Manager of APAC for Provenir on Biztechasia show. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.